All right. Good morning, everybody. What a week. We've got a lot of stuff on the table. And if you haven't seen it yet, Tesla is taking off like a rocket ship. Apparently, they have seen some new valuations due to a an AI system that is getting priced into their company. I can't remember the name of it now. It escapes me. I just had it at the top of my tongue 2 minutes ago, but it doesn't matter, right? There's ChatGPT, there's Bard, there's all these different ones. Couple of firms gave Tesla a new valuation as a company based on that, which puts their stock price higher than it is now. And the stock price is running up to meet that new valuation quickly. So looking at what's going on around the world, we're green on the screen, risk on all the way around. Hong Kong is down 0.75%. So we're still looking at that, kind of asking, where's the stimmy? But with all the rest, you get through Hong Kong, start looking at Japan, through them into Europe, and you can kind of visualize how that went around the world, right? From Australia into Asia, into Europe, and now into the US. And with everything else closed and us coming online, it just shows that progression, right? That steady increase from around the world. So it's that rising tide that lifts all boats. We're going to want to see that in the market breadth, right? Just it's got to be more than just Tesla, especially when you see what is on the docket this week. There's just so much stuff. We've heard all we're going to hear out of the Fed. They're in blackout mode now. And when they go in blackout mode, that is usually when Janet Yellen starts chipping her teeth, because she doesn't have to share the stage with anybody else. It makes perfect sense. I had already started talking about that yesterday, and I get up this morning and I'm already hearing on Bloomberg things that Janet has said in the last 24 hours. So the Fed meeting is on the 20th. That's 9 days away. Not even 9 market days. That's just 9 calendar days. There's almost a certainty at this point that the Fed is not going to raise rates, but also that they're not going to cut rates. It's very likely that they won't call this a pause even now. They're going to use some funny language like a skip or I don't know, something. But if they don't call it a pause, then in their mind, they haven't triggered the effects of what's going to happen when they finally pause. You would think with the lack of Fed speakers on the table this week that things would be maybe a little quieter, but that's certainly not the case. There's just so much on the table. Looking at the biggest things that we have this week, we've got CPI and PPI. That's the highest just from economic reports, but it's actually from other places that we're going to have some issues. And you know, I mentioned CPI and PPI, but there's other big ones too, like retail sales and business inventories. Those are not unimportant ones either. There's a lot this week. Kind of bring it into focus a little bit for today. We have additional auctions, and we've got Bank of England, a speech today or tonight. Oh, I didn't catch that earlier. Microsoft, which has been talked about all weekend long by so many CMT certified technicians, everybody's looking at Microsoft right now, and it just got put on the Catalyst watch at Citi. Cool, cool. I wondered if it was going to be dim. Okay, so there's a little bit of news that just came out too. Apple and Qualcomm chip contract for 3 more years. If you're interested, there's a list of Apple suppliers and Apple affiliated companies. It's worth checking into, right? If you don't It's a huge list. So, it's not some kind of off the cuff, simple little thing. Spot Gamma's implied moves for the day, 0.64. This is an important level. This is something that normally we just look at through the ADR, the average daily range. It is really close to that level. It's why the red line is there, right? Now, whether chicken and an egg, is the implied move there because that's how far the market has been moving on a day-to-day average, or has the day-to-day average move built out this implied move? Do the options land there because that's what price has been doing? Doesn't really matter in the long run. If the S&P moves 0.64% up or down, it will start getting into the edges of that implied move. And then the volatility trigger, 445 on SPY and 4470 on the SPX. Liquidity risk button is showing here, or the label is showing we are low enough to trigger that label. It makes sense because we have a contract change going on right now. You don't see a gap here because Thinkorswim has normalized the gap, but it did already transfer over to the December contract, so it auto rolled forward, and at the same time it corrected the gap. But if you come in here to futures, there's a button that says adjust for contract changes, and if you turn that off, it looks like this with a big gap. So if you want the gap or you don't want the gap, if it's bugging you, whatever, that's how you turn it on, or that's how you turn it off, right? Just adjust for contract changes. I'm going to put this back where it was. And if we come in here, we look at futures, with the U is still active. It's got 4 days left. We want to trade the contract with the most volume. And you can see that the active contract, the Z series, has more volume than the old contract that we were on. And looking at their price, right, between the high, the low, the open, the close, and the bid and the ask, there's a significant difference in there, right? But it won't last. So you just choose which one you want to trade, and that's what you focus on, right? There is a market maker move, by the way, $43. We can see that here. It's nearly a 1% market maker move. Why? Well, because of that gap. Gaps need filled, right? It's no guarantee that we're going to resolve that, but yeah, they're called futures for a reason, right? They're pricing out what the S&P would be at by December versus where, say, the SPX is at currently. We don't have an MDP. We've already hit it. We were flirting with the previous week's high, and we've now broken out of it. We're also inside day breakout from yesterday. The next level is that really big week at the end of August, 45, 47, 75. You could round up 45, 48. It wouldn't matter, right? You could round up a little bit more, 45, 50. I promise you it's not going to matter. Just make it simple and easy to remember, 45, 50. We get to 45, 50, there's going to be some shenanigans, right? There will be an impact in the market. Price will respond at that level. Now, the liquidity risk button here is just a signal that says, hey, things are really light. And when it's this light, we want to be a little careful. We're going to see volumes this week that will mess with you, but it's just rolling, right? A lot of firms are going to be rolling into these new contracts. They're not necessarily opening new positions. They're just continuing positions that they've already had, but it's still going to show up as volume. So, no tool is perfect. Any of your volume tools are going to be a little gray area this week because it's picking up that kind of activity. We are back above the 10 and the 20 week. We're also, as of this morning, back above the 10-day moving average. This red line, I mentioned it a few minutes ago, is the ADR half. Very, very often, that's how far we move. We get tangled into that line, and that is the move. We stop there, up or down. It also lines up perfectly with that spot gamma level of implied volatility and how far we'll go before the algos start to kick in and sell into selling or buy into buying, depending on which way it goes, if we exceed that level. So we can get there, we can interact there, kind of wick through it, mess around with it. But if we start to really drive above it, right, with some conviction, then those algos will come in and buy into buying because they're trying to remain delta neutral. And in their options trades to do that, they'll use something like the ES, which doesn't have a liquid delta, it has a hard delta, and they'll buy into these to balance that options trade to get it back to delta neutral. So this is the level that you want to focus on, whether you get it from spot gamma or just use the ADR half. It's 0.65 most of the time, so you could just measure out 0.65 and call it good. 10-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We're underneath the point of control. We're tangled up in this price shelf, and if we stay here, this very likely will become the new point of control within the next day or so. We'll build up enough volume here to bring that line down. We don't yet have a classic B shape, but that is what we're building into. We're going to lose this much of the chart through the day today. And as that happens, then we'll have that classic B. All right, we got the 5x5, nothing to carry forward from yesterday. This VPOC line is gone. We don't need that anymore. We got one at 4,400 and we've got one at 4,600. So that's it. Nothing else to get wrapped up into. And considering, you know, the lower liquidity, that's a pretty good size gap. And again, you know, a lot of this is just that whole contract change, blah, blah, blah. All right, so we talked last week about the box this week being a bigger box just because there's more days. And that makes sense. But it also makes it hard to see if volatility increased. Because if it did, we're attributing the width of the box to the extra day when actually some of that might be actually attributed to higher volatility. We're really close to the 10-day, basically resting on it. We're about to interact with it. Depends on which way we want to consider it or which MA you're using. I got the EMA here and we're above it, but not by enough that it matters. So we got to really get past it. We are continuing the wave form though. Everything is healthy, everything is fine, it looks great. We'll flip that over to a weekly. 1.38% above the 10-week. It's kind of a stall. You know, what we would want to see is something a little more normalized, something that actually looks like a wave. What we don't want is that kind of back and forth choppy junk. So it's very likely that we begin that push now. We've been kind of stalled out for a little bit, but there is a lot of stuff happening this week, and it could be the catalyst that we've been waiting for. All right, so I said a lot of stuff enough times that should be kind of reverberating by now that there's things on the agenda, but what things? There is an Apple event this week, Wonderlust. I've been hearing about it for the last couple of weeks. One of the big takeaways is that the Apple iPhone 15 is going to be probably another $100 higher than the Apple 14 was. There's also this really big Senate forum hearing on AI. The hearing is called AI Insight. They called in, quote, specialists, and some of those panelists include NVIDIA, Microsoft, Meta, and Tesla. Those are all FANG names, by the way. Add to the fact that Google has a court case they're going on trial this week for monopoly, which is yet again another FANG name. I would add to this Adobe, which has earnings this week, by the way. Keep your eye on that. They have had a fantastic run since before their last earnings when they started talking AI. And oh boy, man, they've just exploded and run like a demon. I don't think it's done yet. All of that going on with CPI and PPI. So yeah, it's going to be a little wild. So far, the market is just overly enthusiastic about the possibilities because we're up. Around the world, we're up. And there's that risk on giddy attitude through the media and through the charts this morning. We'll see if it sticks. We are a considerable distance from the weekly pivot point. It continued to move down last week. So because of the calculations, that put the weekly pivot point at 44.76, and it was at 44.93. So it's down here now, and we are all the way up here now. All right, so this difference is a really big, wide gulf between us and that weekly pivot point. It's generally not a good thing to get too far away from a pivot point. It's just a good rule of thumb. After 4 days in a row of a missed daily pivot, we tangled up into one on Friday. We've already today hit this one, but we've also turned that corner in this basing pattern. So it still has to prove, right? For those of you that are looking for confirmation first, but that is a turnaround. We went from this topping pattern down here, basing pattern. Now we're looking for the transition back up. $45.30 is a cog line, so keep that in mind. And above that, it's just the 45.50. If we can get through 45.50, then we'll aim for that 46. Sounds funny to say it. 46 and 46.32 cog line. I think my thinkorswim broke. Come on, wake up. Quitter. Quitters don't win. All right, things that are up this morning. The China ADRs through KWeb or through MCHI. The FANGs are up. Consumer discretionary also is up. Semiconductors, precious metals. Even retail is up this morning, more than 0.5%, with biotech right behind it. So we're risk on across the board. Financials are lagging, communications. And then our defensive names are lagging the most. But a rising tide lifts all boats, so I would expect even those to begin getting bid up. We still got a carryover from the marijuana sector too. And it wouldn't surprise me if we see explicitly just EVs alone also catch a bid today, right? With that news. One of the things that's helping this move in the ES is that falling dollar. So we got up into some crazy levels last week and it was holding that high. But now we've broken back a little bit, just a little bit. So it's a start, but it needs to follow through. We've got a quarterly level at 104.73. And if we can get below that and stay below it, keep it for the day, close below it on the day, then it starts that transition, maybe backing off some. Unfortunately, though, we do still have bonds down around that 118. So, you know, this isn't good. Those bond bulls really need to get into the game. And with this dollar down and 10-year yields up, this is a disconnect that very likely is going to resolve itself as we get into the open, and very well could change the dynamics of what the S&P is doing today. Because the dollar is either going to start to come back up and match what the 10-year is doing, which is going to take the S&P to the downside, or the 10-year is going to start to go down as well with the dollar, and then we're really going to go up in the S&P. We're talking 45.78 by the end of the day kind of thing. All we got to do is get through that snow line at 45.38. We can get to 45.78, no problem. So we're talking about the capacity or the potential for a serious push today. If the 10-year and the dollar start working as a team, and if we continue to see those bonds fall off, unfortunately, we don't want those bonds to continue to fall off, right? So if they start coming up and that 10-year comes down with the dollar going down, we could see a move up in the S&P, but I don't think it would be as significant of a move if we are getting bonds rising up with us. But we kind of need those bonds, so you know, let's just hope they come up with us. U.S. dollar Japan turned around on that monthly level. I've had that level on there for a long time, and it always provides some insight. The intervention level from 1998 holds true, right? It's not a perfect line in the sand, but we're back down now below that level and it needs to stick, right? We want to continue to see this move to the downside, nice and easy, no big, fast, sudden moves. So again, there's just so much going on out there right now that a lot of the moves that you're going to see on your chart, whether you're in the, you know, the NQ, the ES, SPY, the QQQ, the things that are going to move those candles aren't on that chart. It's not going to be stochastics and MACDs and moving averages and measured moves and none of that stuff, right? That's not what's moving that market. Those things are just measuring the movement. Pot stocks are up the most. MSOS, for an example, this morning, nice rise from the close of yesterday. The thing is, though, they closed down so hard that really they're just trying to get back up to that $9 level to kind of where they were on Friday, right? And look at the repeat. It's the same thing on Thursday. It had a nice run up into the afternoon, then it dumped down. Friday, it had a nice run up into the afternoon and it dumped back down. But we are getting those higher closes, right? Over the last Wednesday, Thursday, and then into Friday, those higher closes. $9 is that line in the sand. If we can get through that, then we'll start focusing on $12. Got this big liquidity zone up here. The Chinese ADRs right behind pot stocks. We've got zones everywhere layered on top of each other and moving averages and trend lines all over the place. So this thing is kind of trapped in its own noise. Big gap up this morning. Nice pin bar reversal from Friday, right? That little bit of recovery play. But if we take it into the intraday and we look at it, it doesn't look so strong, right? On the daily, that looks like a really great turnaround. Like it really put in the effort to turn back. But on the daily or on the intraday, that doesn't look so fantastic. Wouldn't be surprised if we close that gap and then we continue to drive to the upside. There are gaps up here that need to be closed starting at around $29. Because if that green candle closed at 29 and then it opened it down here at 28.5, then it still needs to go all the way back to 29 to get that gap closed. A lot of technicians will say, as long as we get inside that candle, it counts. I don't say so. Do it your way. Just be consistent with whichever decision you make. Consumer discretionary, which makes sense because this is basically Tesla. And so when Tesla made a really big move, so did this ETF. There's no rocket science behind that, right? It's just simple math. So, yeah, we're going to get into that spot here really quick where we're going to be rebalancing portfolios for the next quarter, right? Chasing after the leading horses, so to speak, and rotating out horses that kind of started to lag. And you got to watch something like that, right? Which could put XLY as a sector that, is showing promising changes, like some good money flow is coming in, when in reality, it was just getting bullied by one name. That China ETF, FXI, nice gap up this morning, but it's still kind of fading back. Precious metals like gold, silver, gold miners, emerging markets, which fits into the whole China narrative, and Japan. Semiconductors makes sense with all the semiconductors on the table. And NVIDIA just got another upgrade, and a lot of analysts put out NVIDIA recommendations. I would proceed with caution on that. Sure, it's been a monster, but once it starts getting those kind of rumors milling around it, and there is a humongous fight going on right now about whether or not they were legitimate in their valuations, that's a black eye that's hard to shake off. So if they're holding on to a ton of it, then they're trying to unload it and give it to you. right? So that's the idea. They promote the heck out of it. Oh, it's fantastic. You should totally buy some here, buy some of mine, right? You kind of get the idea. So just proceed with caution on that. And it's not the first time they've done that either. Now, energy really has been leading the pack. And right now we're in the green with energy, just not by very much. So we want to see, that doesn't necessarily need to dump down, but when we're looking at a capital rotation, energy is one of the tells, right? Whether it's going to be a cap rotation or a fractal rotation. And if we don't see energy start to share the load, then we're probably going to see an increase in volatility, right? Solar's actually doing really good this morning, interesting enough. And Bitcoin is down with nat gas down. So the Bitcoin and the NASDAQ were at a 70% correlation for a lot of the year. That correlation is starting to unravel. But generally speaking, we would expect Bitcoin to be up if the NASDAQ is up, right? Kind of run in tandem. So liquidity tell. So we're looking for that rising tide. All right, 17% of the S&P is up 0.5% this morning. That's not overly bullish, but sometimes it's not the total number of names. It's just the names that happen to be up that matter, right? And when we take a look at what is up, FANG names, Tesla, Apple, NVIDIA, AMD, those are all FANG names, Microsoft, Meta. FANGs can carry the market, right? Those magnificent seven can carry the market. They'll do it better if they have some financials assisting them. And while we're looking at it, Bank of America, Citigroup, Wells Fargo, JP Morgan, oh gosh, check it out. We got banks. So there you go, right? It's a risk on day. We got both risk on sectors. We got all three risk on sectors because consumer discretionary is the third one. And whether it's only one name doing all the work or not, it's up as well, Tesla. So with all three risk on sectors driving to the upside, we're looking for that rising tide to bring everything else in. So far, we don't have it. They're doing all the work by themselves. But that's one of the things you're going to want to look for, right? Look for those other names to start rising as well. Names in the NASDAQ that are up at least 0.5%, 31% of the NASDAQ is up this morning, that 0.5%. And so far, semiconductors are the largest group. No doubt about it. A lot of FANG names, of course, but then we've got those motor vehicles like Lucid is up along with Tesla. And we know that if we're going to get the China ADRs like PDD and JD and Baba, Baidu, that we're also very likely to see, XPEV, Nikola, Neo, those should also start to come up as well. They're not showing up in here yet per se. All right, so there's NEO, gap up, not much of a surprise. We're still mid candle, got a lot of work to do if we're going to see NEO turn back. XPAV is in a better place. It's got a much bigger gap up, but it's still floundering in the middle of nowhere inside last week's range. 1991, kind of that line in the sand. Just to get a good start, it's got to get out of its own week. We are inside week now, right? It's IX10, third week in a row. And so far, this is a classic topping pattern. Breaking that low triggers a true short to the downside. So this lower high is not good. It needs to get up there and get that done, or we're going to continue that down. Not good. All right, Tesla's calming down a little bit. It hit 266.5. It's back down to 264. That's a magnificent gap. Very likely doesn't get closed today. The valuations that are coming in is putting Tesla at over $400. So it's driving towards that level, right? Just to kind of put it into perspective. They're saying that the company with this new AI is worth more, billions more. And that translates into share price, right? And that's why it's driving towards that new valuation. The thing is just, a little grain of salt. Until we have more information, that's just one estimate from one analyst who says that this is going to give Tesla that much more value as a company. We are inside week breakout, by the way. So holding above 261.30 is a really good start. $277.55 is the 50% mark of this control candle. You can see how well it was in control, by the way, 212.31 on the dot. You got to love it. I mean, seriously, you can't make that stuff up. 277.55, that's the next level to get through. We get through that, then we'll target basically $300, just round up. All right, gap up in NVIDIA. This is a topping pattern on the weekly chart that still hasn't died off yet. Higher highs and higher lows, still not done. Controversy or no controversy, this thing is holding those highs. Even this morning with that gap up to 460, we're still inside week, and we are most definitely IX10 underneath this control candle here. So, as long as we're underneath 472.44, then the move down last week is still in control. We got to get above this 50% mark, right? Which would show a reversal. And then it would just be this kind of sideways choppy stuff. But if we're underneath that line in the sand and we continue to hold underneath there all week long, then it's very likely we'll break and go lower. It's not guaranteed, but you can see how we had a big candle here. And all those days after the big candle, we basically held above the 50% line, and then it continued. Well, we're doing the same thing now on the other side, in the other direction. If we continue to hold here underneath that 50% level, then we're going to break and go, right? Simple logic 101. Now that's not always true. Here's a great example. We held above 50%, chopped about, and then it went down instead of up. So nothing is always, right? It's kind of the idea. There's no always to anything. Either way, zoom out, big picture, that is crazy bullish. I think that's like a technical term, right? Crazy bullish. Lots of stuff with Apple. You know, everybody loves to hate Apple when it's down and talk about how it's finally, you know, everybody finally woke up and came to their senses and realized that this company is done and it's just, you know, it's never coming back and you should dump all your shares and blah, blah, blah. Yeah, I bought some last week along those lows. I didn't get the bottom, right? I never get the bottom, but I did get some of those lows. And I'm still in this with just shares. I didn't even bother with the options. They didn't look good. And, you know, to be fair, this does look pretty ugly after that nice topping pattern we had. Big break to the downside. And then this failure here, because that failure gave it a true lower high, a very valid, very true lower high. So it certainly doesn't look good by any stretch of the imagination. But we had the same kind of pattern back here, drive to the upside, and then it faltered and, you know, it kind of screwed around and it tried to make a run and it stalled, and then it really took off, right? And that's from January 2023 all the way up to where we are now. So it's been a heck of a run from 124 to 184, and we actually went to 194 plus some. So, you know, it's given a little bit back. It makes sense. We do have a market maker move on Apple, by the way, an additional $4.25 on top of its ADR. So with Apple and the Apple event this week and the AI conference this week, or excuse me, not even conference, Senate hearing, 183 would get that gap closed with just a little bit extra because I rounded up. Keep your eye on 183. If we go out here to the weekly and we measure last week's candle, we get that 181.76. And here in the pre-market, we're trading at 180.30. We closed at 178. That's a pretty decent move already. This kind of behavior is the start of a turnaround, right? We were pointing it out in another name earlier, where we get the initial drive up and through most of the day, it looks great. And then it falls down as we get to the end of the day, but it was better than the open, or it was better than, you know, the previous day's close. And it's just showing that markets don't move in a straight line, obviously, and that it wants to have a move similar to what we see here on the right side, where we got a higher close and a higher close, and of course a magnificent close, but then that's where a pullback happened. Same thing to the downside. So it's just those transition, right, from day to day to day. It doesn't want to move too far too fast. So it makes the initial move and then it fades back, then makes the next move and it fades back, and it forms trend. So I opened this back up in case you wanted to take a picture. Quite a bit of this is from Seeking Alpha. I was listening to their morning breakfast or whatever it's called. Every weekend they come out with this podcast, and it's an email. It gets, you know, bandied around all over the place. Most of that stuff was listed in that email. And there's other sources too. I mean, it's not like I just only look at Seeking Alpha, but if you're wondering, you know, like, where did I get this information from? A lot of it came from there. A little bit came from FinViz, and then, you know, I've got subscriptions at other places, but the bulk of it is seeking alpha, which you don't need an account there. Usually news hits the paid services first, and then after 2 or 3 days, it gets distributed into the free services places. Well, this isn't exactly, news shattering stuff. It's just things that's going to happen this week. So, by the end of today, it'll be out all over the place in free places. So you'd have got there eventually anyways. Checking to see if I missed anything. There was just so much stuff to hit. All right. CRNX, really big gap up this morning. You can see how last week, if we get rid of that gap for a moment, last week looked like some decent normal price action, a gentle fade from around 18 down to 16. And that looks, pretty decent as just some regular decent price action. And then you get something that looks like that. So from a $16 close to a $29.50 move, right now we're fading off to 26.5. Here on the weekly chart, you can see how it's been just a fade from 25 all the way down over May, June, July, through half the year. Well, we're above all of that now, right? We're sitting up around 26. We were sitting all the way up at this high here. So CRNX has made a serious move. Watch the volume of flows on this thing today as we come in, see, by 10, to get that first 30-minute volume flow. This thing might not be done yet. I would stress caution on this, right? It's already made some significant moves. But the reason I'm thinking it might not be done yet is it very likely has a ton of shorts in there. And those shorts are going to take time to recover, right? Or to cover and get out, not recover, to cover. And we can see here, if we go to something like TrendSpider, that 26 area has this trend line here. And we went from a curled MACD underneath the 0 line. We got the cross up between the MACD and the signal line. It's headed towards 0. This drive very likely took it above 0. And that'll be the cross up, like this cross up that we had and that drive that we had last time, right? The difference is it's making the entire drive in a single shot. We had the same thing in April 2022. We had that just magnificent push, 2 weeks straight. The third week it digested for like a month, or excuse me, a week. It's a daily chart instead of a weekly. So massive break, fade for days, and another big old break got it into that liquidity zone. And then it's just been a dog since then. But the dog is back. For some reason, it's not updating that as much as I'd like. But either way, there you go. That's a fantastic move. The other one that was on the big gap list with a high short interest, IBXR. Right. IBRX. Oh yeah. Classic liquidity zone. We came back to it. We left a lot behind on the way down. Any move to the upside is going to have to negotiate through all that. This is a sub penny market, right? I mean, that thing, not exactly our normal here. But this morning it got above that 1.5. It's kind of fading back off 1.4. It's trying to turn around. Just remember where this thing came from and the fact that it's not done in the bigger picture. And NBY, 3.6 million in volume. Pharmaceuticals. People do love their pharmaceuticals. Another penny stock. It did get above $1, but it's fading back a wee bit. So it like had 100% change in price, right? From 60 cents to $1.20. And then it knocked 30 cents off of that. So it made 100% and then it gave back 50%. It's still a pretty big move. And that's a lot of volume. The shorts are in here that's got to cover. You can know that they can't get it all covered in a day. Especially if they think it's just a spike and that they don't really need to cover. They'll hold on. If that continues to drive to the upside, then they'll start getting more and more shorts covering. Who else has got some volume this morning? Outsized volume, not just some volume. Whirlpool for real? Oh, that's not Whirlpool. Wheeler Real Estate with some significant volume to it this morning relative to its size or to its average. I wouldn't mess with that one. Yeah, NVY kind of takes the cake. NBY. That pharmaceuticals. There's been over 5 million shares traded on Tesla this morning, even though it's pre-market. So I'd continue to watch Tesla with those flows. It's very likely not going to slow down, right? There's a, what was it somebody said the other day and I loved it. Yeah, cult. There's a cult following when it comes to Tesla. No joke. So all right, enough of that penny stock stuff. Hopefully I've given you guys enough to kind of start your week, give you a solid foundation. One, be very careful. This is all sentiment driven at the moment, right? Even the change in Tesla, that's one analyst's opinion about how that AI product that they're gonna be unveiling soon is gonna change the value of Tesla's as a company, which of course changes their share price. We want to get some more physical hard evidence of that, right? Some real data behind those numbers. Otherwise, that lofty valuation of Tesla at 400 and 600, that's just someone smoking something, right? They put some Fruit Loops in their pipe. So that, I can pull some numbers out of thin air. That don't make it legit. And then the Senate with their hearing this week, it's a big deal. All right. Everybody be careful, be safe, have a good day. I'll see y'all tomorrow.